Okay, let's move focus to corporates. The rupee has been one of the worst performing currencies in Asia this year. While the depreciation has benefited certain spaces, there are companies which will be impacted due to their exposure to the dollar-denominated debt. Century Plyboards is one such company. At least one brokerage house seems to believe that Century Plyboard would be one of those that could get impacted negatively. Let's discuss the impact of this weakness with Mr. Sanjay Agarwal, the MD and CEO of the company. Viewers would remember that about a couple of months ago, Mr. Agarwal had come in and spoken at length and very beautifully about how the business trajectory for CenturyPly looks like over the next 2 to 3 years. Mr. Agarwal, thanks so much for joining in. Does this in any way hamper what could have otherwise turned out to be a decent run, this exposure that you have to dollar-denominated debt and the weakness in the currency?
Actually, till last year, our raw material imports were much higher than now. In last about 1 year, a lot of logs import has reduced. So presently, to our top line, the total import of raw material is only to the tune of about 15%. So at the difference of about say 10% in currency appreciation, the impact should be about 1.5% on our EBITDA. But what we have taken certain actions is that we have been able to increase prices of different items. Some prices about say maybe 1%, some prices maybe up to 2%. We have taken an increase. So we think that there may be a very slight impact which we will be able to probably correct the next time we see our data. But according to us, we have actually corrected and it should not have any impact on EBITDA till now. But still it might have a small impact which we don't notice right now.
Just a small follow-up question. What's the percentage of the quantum of raw materials that you import currently, Mr. Agarwal?
Yeah, currently only 15% of our total top line. So as a part of our raw material cost, if we say the imported raw material cost is about 37% is the total raw material, and out of that imported is only 302. So that's about maybe 45% of the total raw material is actually imported.
All right. Sir, do you follow any Sir, do you follow any particular hedging strategy on your dollar-denominated debt that probably protects you from this kind of currency volatility right now? What is in place at the company? Or are you significantly exposed?
Yeah. And earlier we always had a policy of non-hedging, and we found that the hedging cost was actually more than the rupee lost against the dollar. So we always mostly benefited, except sometimes. This time, yes, we were caught a little unaware, but we booked at the level of about 69, 68, 90 or something. At that level, we booked most of our exposure. So today, out of $27 million, $17 million is booked, and only $10 million we are exposed. But Century Plywood is exporting about $14 million of goods every year. So we will get that kind of a natural hedge within the company, because $14 million export will get the benefit of the increased dollar, which would have come as an extra probably profit to us, but it's a natural hedge to us. So we are really not so bothered.
Any margin?
$17 million we have covered till now.
Okay. Any margin implications, even a minute amount or no?
Sorry, I could not get you.
Any margin impact?
Margin impact is because of this. I had just explained last time, just little before, that the percentage is 15% of raw material is actually from the top line is being impacted, and about 10% is the depreciation. So 1.5% should have been the margin impact. But then what we have done, we have been able to increase prices of different things. So there may be some margin impact. Yes, I cannot deny, which we do not see at this moment. Maybe in some item, some mistake we are making. But the margin impact will not be high. It will not be 1.5%. It should be lower, much lower than 1.5%.
So Mr. Agarwal, there is a brokerage note which, of course, I would believe your numbers, but the brokerage, are you saying that these numbers are way off? Because they are saying that about 50% of raw material imported, which is a slight deviation to what you said. But I think what they are importantly saying is that they believe that there is inability to pass on prices, which again you are countering, and their margin calculations are 2.5. You are saying it is not even 1.5.
Yes, because you see, they probably are working on a data which is much older. Earlier, our imports were much higher, which have considerably reduced in last about 8 to 9 months. They have considerably reduced because one product we used to sell, we were the biggest in India, is the face veneer, and we used to import a lot of logs into India. Slowly, most of the countries have actually stopped exporting logs, and so our import of logs into India has really reduced. And that is the reason our exposure to foreign currency has reduced. And we are now ourselves importing just the face, and we are not marketing that finished products in the country also. So that is a big change in our whole portfolio also. And that's how probably that an analytical house has probably given a report which is little old. It was right earlier, but not now.
Right. So just to get a slightly a more forward outlook from you, just talk about your volumes and your overall in various segments and the realizations that you see post these cost increases and these prices increases that you've undertaken.
As far as plywood is concerned, I will talk segment wise. So as far as plywood is concerned, of course, we have taken the increases, and the plywood volumes have increased by about 7.5%. It's not up to what we were expecting, but in the present circumstances, I will not say that it is bad. But what I see as far as the market is concerned and the way people are now looking at us, the dealer, the sub-dealer, the retailer are looking at us, we are getting inquiries. So that means I find that there is some movement in the market and people are getting more interested in our product, which earlier, whenever we approached them, they said no. As far as our decorative division is concerned, we have been able to take a mild, small price rise, have not been able to really pass on, but then that is the division where actually we have a lot of exports, so we are quite shielded as far as the increase is concerned. The growth in decorative division is very good. It's above 15-16%. So our MDF, the growth is again in MDF, growth is excellent, but the MDF market is going to be little slow because there is too much of production is coming into India, and we expect that MDF may be a little slow for some time to come, but that's okay. Every industry, I think the same thing happens. Initially somebody comes in, he makes money, and after that a lot of competitors will come in. It will take some time to settle down, but yes, it will happen. The future of MDF, the MDF is the future rather. So whoever has come in, I think within a year or so, I expect that total quantity being manufactured in India will be consumed, and then we will have a much better market.
Got that. Mr. Agarwal, thanks very much for joining us. Really appreciate you taking out the time and clarifying that for us. So the management categorically saying that the impact for them on the margin side is going to be not more than 1.5%. They are hedged already for much of their exposure in terms of the dollar debt at a rate of 68.9. So there's not much of an impact on that front, and also that they have managed to increase prices of products across various segments, which pretty much shield them from any further downside as well. So the stock in the last 3 months, though, has not done much. Today's session is managing to hold up at the peripheral, up by about 1.76%.